Hello and welcome to Vox Markets. I am John Hewan. I'm delighted to be joined again by Vikki Sylvester, Chief Executive of MBH Corporation. How are you doing, Vikki?
I'm good, thank you. I've had a nice restful bank holiday weekend after getting the results out. So yeah, all good.
Yeah, perfect timing for the bank holiday. Given these are your maiden results on Aquis, but obviously you're listed elsewhere. But yeah, perhaps we can talk through the highlights. It was a fantastic performance on the top line.
Yeah, absolutely. Revenue was up, so everybody was really pleased about that. But I'm sure everyone's noticed that profitability was not as high. And that's largely due to the increasing costs that we faced last year, energy costs, um, inflation, recruitment,
Mm.
resourcing, that kind of thing. So nothing I don't think the principals haven't shared, the company owners, we call them principals, haven't shared throughout the year on our updates explaining what we've been doing, but also quite a lot of groundwork has gone into 2023. And I think that this year we're starting to see a lot of industries back up and moving again, construction, for example, being one of the key ones. So yeah, we're hopeful that 2022 was a bumpy but a foundation year, if you like, for this year going forward.
I think 2022 was a bumpy year for everybody, particularly in
Yeah,
the construction vertical, which is one of your core verticals. Perhaps let's
it
start
is.
with what's driven the really strong top line performance, because construction was strong at that level.
Yeah, certainly. I would have said the post-pandemic year. I think actually during the pandemic, economies had more money in the system, you know.
Mm,
But in 2022, what we've seen is a bottleneck of all the work. So when we went through the pandemic, there's always this worry of, will this work disappear? You know, what's this going to look like after this? Will it still be there? And actually, it has all been there. If anything, it's just bottlenecked.
mm,
Um,
mm.
and the work is out there, and we're getting more contracts and winning more contracts. The challenge last year was resourcing them, actually getting the right people in place to be able to deliver on those contracts, because the workforce had changed so dramatically during 2020 and 2021. So the work is definitely there. We're seeing a really good flow of work, and that's contributed massively to that increase in revenue, because we did no acquisitions last year. We're hopeful to do more this year. So it is purely based on the companies that were in the group, and that widening, I guess, of the customer base and the workload again, reopening, which has been great to see.
Yeah. What sort of work are you doing in the construction business, or across the portfolio of construction businesses, I should say?
Oh, yeah, it's a variety. A lot of it is high-end sort of outfitting. So one of the companies, for example, specifically works with Premier League football clubs, and do renovations with them. Another one works specifically with hotels, and hospitality chains, because that was another area, you know, that was really closed, and now it's
Mm.
reopening and people are starting to invest in that again. And then the other one does things like rented apartments and some domestic, but they're owned commercially. So there's quite a variety, but it's all mostly outfitting and that kind of thing that they do, renovations.
Yeah, yeah. Obviously, you mentioned being able to resource the jobs, from a staffing perspective, and I think wage inflation has been a problem for everybody,
Mhm.
across the economy. Inflation was obviously quite pronounced in terms of materials as well. But
Yeah.
I would imagine you've been sort of working out how best to manage that sort of increase in input costs.
Yeah, and it's not just the inflation. Obviously, the inflation was a big consideration. It was actually supply chain issues
Mm,
more broadly than that. Actually, just getting the stuff to be able to deliver meant that there was delays on projects, and that was a really tough balance, coupled with inflationary pressures. That was a probably a daily, weekly balancing act to keep all of that together. So it definitely was challenging, and we've seen as well some of our supply chain fall over coming out of the pandemic. So some of it has been re-establishing a new supply chain. So that takes a little bit of time and effort as well to build those relationships. You know what it's like when you first start out, it can be a little bit bumpy at first, and then you start to get in a flow and a process. So we saw a little bit of that as well last year. So that's that foundation reference I'm making, where all of those things were really preparing us a lot for this year.
yeah, and I guess if a small business is trying to operate on its own in a market like this, it must be even more difficult. And here, I guess we see the
Yeah.
advantages of your agglomeration approach, bringing a number of smaller businesses into one place where you as a group can have that sort of buying power, supply chain management efficiency, that kind of thing.
Definitely. And if anything, I've learned since being part of this group, and I brought my business into this group, which makes me a little bit different in some respects. But the one thing I've learned is the power of that collaboration just cannot be underestimated. You know, you've got a bunch of SMEs there that have all got through this, all continually working together. Some are growing as well during all of this, and we're growing together as a group. There is certainly a power, I suppose, in that collaborative approach, and it might just be sharing a contact, sharing some knowledge, you know, working on a contract together, maybe some joint procurement, maybe some sharing of resource, and that's constantly happening just naturally now across the group. That certainly has meant that every company has been able to tackle the challenges together. It would have been really interesting to see what would have happened to these companies if they were not part of the group. Obviously, I don't wish that on them. I'm glad I want them to be in the group, but whether or not they would have all got through, you know, is a question we can't really answer. But in my mind, looking at what's happening across the business space, all of these companies got through, and I think that really stands as a testament to the group and the way the group culture, the way the group works together with the businesses.
Yeah, it always feels like it's sort of the whole is greater than the sum of the parts, as it were.
Exactly. Yeah,
Um,
exactly.
Can we talk about the so your other key verticals are leisure and education? What's been going on there in the over the last year?
Yeah, so if I start with leisure first, obviously we saw during the pandemic the boom of the caravan when nobody could go anywhere. So some of the questions we had was, well, will that continue? What does that, you know, what does that look like? And it has continued, because what it did was created a new generation of caravan owner that perhaps didn't exist before. So we're seeing really that continuing. We're seeing that continued growth in the caravans, and no sign of that changing, which is fantastic news. In education, education typically does well in a downturn, because a downturn normally means there is a lot of job vacancies, there's a lot of upskilling, a lot of reskilling, a lot of movement in the market. So typically we see investment in education during that time, but education is one of them where it's fairly solid in the sense that it always exists. You know, people always need education. It just changes, and we have to change with the policies that that go alongside of that. So we're seeing those continuing trends. Obviously, as you've said, the same sort of pressures all the others are seeing, wage inflation and things like that. But again, we're seeing a lot more of a collaborative approach, which is really helping to strengthen that vertical. So they're both great verticals, and both continuing to do, I think, what we've seen over the last few years.
And looking ahead there, the verticals, including construction, that you're going to continue to focus on, I presume.
Yeah, construction, again, they're seeing the biggest growth, especially in terms of revenue and projects. So yeah, they've got work coming out their ears.
Yeah.
In fact, I was on a call before this one. How are you? Oh, I've had a really busy weekend. So they're definitely seeing that growth, and they're seeing those projects moving. It's just still back to whilst the supply chain has improved and staffing has improved, it's still a little bit there. It's just still there. We're still working our way through that.
Any plans for expanding into new verticals? You mentioned it was a sort of quiet year on the deal making front.
Yeah.
What have you got lined up?
Yeah, so I mean, this is my first year as the CEO, and one of the first things that we did together was sit and look at what we've learned over the last 5 years. What were our strengths and our opportunities, and what things do we need to work on? And one of them obviously was around acquisition strategy. What do we want to do? And the strategy is that we want to create more depth to the existing verticals. So that's a big part of that. We're looking at setting up our vertical boards, if you like, now to be able to collaborate and drive their own growth. And in terms of new verticals, yes, they're certainly not off the table. I think the important thing there would be having a good anchor strategic vertical that's sizable enough to start generating and building the rest of the vertical. So they need to be a business that's wants to do acquisitions, has got some solid infrastructure to be able to grow that vertical to allow that to happen. Because some of our reflections is the verticals where they've had that have grown quicker and bigger, so that's really what we're focusing on. So it's not ruled out, but I would definitely say that vertical depth is where we're focusing at the moment, to get those verticals more solid.
So presumably you've seen that the momentum in those businesses increases the more scale that you put into them.
Exactly. The more businesses that join a vertical, there's a reason why they then start to it's not just about the EBIT and the turnover, it's about the resource, the knowledge, and everything else that comes with it. So definitely helping some of them create more depth. Engineering at the moment's got one in, food and beverage has got one in. So focusing on that is certainly going to help those verticals grow. And if we get a really good anchor strategic in another industry that is fits what we're trying to achieve, then of course we wouldn't rule them out. But it's obviously they're a bit harder to bring in, because once you've got some industry expertise as well, people know their industries, so again, it starts to perpetuate and bring more in. So yeah, that's the focus for this year and next year.
Yeah, and I mean, hopefully the macroeconomic backdrop improves slightly, but I'd also guess that a difficult economic environment is quite good for you, in the sense that smaller businesses may be seeking the sort of the refuge of being part of a bigger group.
Yeah, absolutely. Everything brings opportunity and everything brings its challenges, but certainly for other businesses, they are starting to now see that being part of a group could have benefits for them. We're also seeing the marketplace changing a lot, companies coming, companies going, companies merging. So there's a huge amount of activity. And very often, I mean, a lot of these business owners, they are entrepreneurial. I don't want to say they like a bit of chaos, but they kind of operate at their best actually when there's things going on around them that create opportunities. So they're certainly at the moment really highly engaged, really motivated, really keen on driving this year. And you can feel it. It's a really positive vibe across the group, and I think we'll start to see lots of good stuff from them this year.
Yeah, absolutely, and it's a really positive first set of numbers as an Aquis listed company. Been a bit of a journey getting there. It's fully audited results as well. It's rare to see on day one of a release.
Yeah, they're fully audited, and yeah, we're quite new to Aquis, so it'd be really interesting as well to see how that comes this year. We do want to attract some more UK investors, so we're keen to hopefully get them engaged with our story. We understand small business appears risky. We get that, if somebody was investing in a small business down the road, you can half expect not to see your money again, which is why we've come together to de-risk for investors, but for investors that really believe in the power of small business, and the fact that these company owners, and I think I've talked to this a little bit before, these company owners fight for their companies for a whole different set of reasons. This is part of their legacy. They've been there 20, 30, 40 years. The people in them are very important to them, and the businesses being successful is very important to them. And the great thing about small business is just the way they can move, and the way they can change, and the way they can develop and come up with new ideas and be really innovative. So, we're looking for investors that really believe in the power of that. And hopefully we'll attract some new UK ones now that we're on Aquis.
Yeah, absolutely. Well, it's certainly strengthened numbers within the MBH group, and strengthened these numbers, especially at the top line, and actually still making money in what was a very difficult year. So thank you very much for talking us through the results, Vikki, and looking forward to speaking to you again.
No problem. Thank you, and good to see you, John.
Thank you.